Hello there, good afternoon, and a very warm welcome to today's webinar for Sage 50 Cloud Payroll, all about attachments of earnings. My name's Duncan. I'll be your host and presenter for the webinar today, and we are joined by my colleague Ollie, who is standing by there in the background, ready to answer any questions that you might have. Let's now take a look at what we're going to cover in the webinar. So we're going to start by running through the attachment types in Sage 50 Cloud Payroll. I've tried to group those into 5 broad categories. We're then going to look at how to work out how much you need to deduct for an attachment of earnings order. There's a couple of different ways that might work. We're then going to demo how to set up and assign the attachments to your employees. And we're going to finish the demo by processing the attachments. We're going to do a couple of pay dates just to show you the impact of some of the attachments that maybe carry forward deductions that haven't been made. And I have prepared at the end, if we have time, a very quick knowledge check or a quiz with a couple of questions on today's topic. So that is our plan. Let's now move on and take a look at attachment types. So an attachment of earnings order is a court order which instructs an employer to deduct debt repayments directly from an employee's wages. There are 17 different attachment types that you can select within Sage 50 Cloud Payroll. Like I say, I've tried to simplify as much as I can and group these into 5 broad categories. So the first one is just a standard attachment of earnings order for debt deductions, and it may be classed as a priority or non-priority attachment. So priority orders are generally for payment of maintenance and fines, whereas non-priority orders usually deal with civil debts. And the attachment categories that you would choose for these type of attachment orders would be numbers 1, 4, and 12. So that's what the numbers mean on this slide. So that's the 1971 priority, 1971 non-priority, or fines enforcement categories. And the main difference between those is whether or not it carries forward deductions that can't be made due to protected earnings, but we'll come on to that in a little bit more depth as we go through the webinar. Next category is child maintenance. So 2 attachments that are in use for this in your program. There's number 2 for child support and number 14, child support 2012. And again, we'll explain the difference when we come to look at those in the demo. We've then got some orders for payment of community charge or council tax. So community charge is going to be pretty rare. That was the name for what was known as the poll tax back in the early 90s. Very controversial, that one. So if you get any attachment order for unpaid poll tax, that would be category 5 or 6. But in the main, we're talking council tax attachment of earnings order, CTAEO, where you would use category 7. Or if it's Welsh council tax and the order has been issued since the 1st of April this year, there's a new category for that, category 17. Scottish earnings arrestment, so the system's slightly different in Scotland. An earnings arrestment is the name for an attachment order in Scotland, and we've got 3 different ones you could use there: earnings arrest, current maintenance arrest, or conjoined arrestment order. And finally, the most recent attachment type is to recover benefit debt deductions. So they're known as direct earnings attachments, and they can be deducted either at a normal rate or higher rate, depending on the reason for that benefit debt being recovered. And that's where you would use references 15 and 16. So I'm going to show you where to find all of these as we go through the demo. Now, when you receive an attachment, half the battle is identifying what type of attachment it is. So hopefully this information will point you in the right direction. But then you need to know how to make the deduction, how to work out how much you need to deduct. So I'm going to explain the 2 different ways that you might be asked to work out how much to deduct in respect of an attachment of earnings order. So the first way is you may receive an order that tells you specifically the amount that should be deducted each period. And this is known as a normal deduction rate, or NDR for short. Now, very often this will also come with a protected earnings level. So the protected earnings is an amount that the deduction must not reduce the employee's net pay below. So it's the minimum amount they need to take home, or the deduction will not be taken. And with any type of an attachment order, you can deduct an additional £1 per attachment from your employee towards your own costs. But this is entirely optional. It is charged to the employee, it's worth noting, rather than charged to the court or anything like that. But there is a £1 admin fee that you can deduct should you wish to. And I've had a look online and I've managed to find an image of an attachment order, and this is one where it would indicate the amount to deduct and a protected earnings amount. Although with child support orders, the protected earnings is sometimes expressed as a percentage. So 60% is the protected earnings proportion in those cases. So with a normal deduction rate and protected earnings, you're being given specific figures on the order you receive. However, with other types of attachment, you may be given tables to actually calculate the deduction amount. So particularly when there's variable pay, there might be a table that has banded earnings, so attachable earnings from and to, and then it will give you a percentage rate or an amount to deduct if your employee's attachable pay falls within these particular bands. So the good news with these ones is that all the tables are actually built into the software. So if you do get one with tables to calculate the deduction, you can tick a box and it's going to look in your legislation settings to work out how much you need to deduct. So I want to quickly show you those attachment of earnings tables in the program. So if I just bring the slides down and go to the company tasks here on the left-hand side, I'll jump into legislation at this point, and you'll see there is a tab for AEO rates. It's then going to give a drop down with the 17 different attachment types. And if I use council tax as an example, because this is one that uses tables, it'll then show the tables effective from, in this case, the 1st of April 2007. And if there's been different rates and bands throughout the years, depending on the date the order was issued, it will use the relevant table from the settings. So for example, if an employee is paid monthly and their attachable pay, so that's the pay after tax and national insurance has been deducted, is £1,000 per month, they would fall into this category here, and it would be a 12% deduction of their attachable pay that will be taken. So if you have been given tables, but you're still unclear as to what type of attachment it is, if you can marry up the tables you've been given with what's in the legislation settings, that will confirm if you've selected the correct one. So those are the attachment tables. In the demo, I'm going to show you a couple of different ways, different types of attachments. So some that use normal deduction rates and others that use tables. So we'll get a look at both methods. But before we go into that, let's just clarify what exactly counts as attachable pay. So you would need to include in the attachable pay wages and salary, including bonuses and overtime. So pretty much any payment that's subject to tax and NI is also attachable. That also includes holiday pay and other pay advances, pension payments made to an employee. So if you pay them a pension through your payroll, that's attachable. And also statutory sick pay, which is pretty much the only statutory payment that would be included in attachable earnings. So the notable exceptions, the things not included in attachable pay, are statutory redundancy pay, as well as the statutory parental payments, maternity, paternity, and adoption. And there's a handy table of what counts as earnings in our knowledge base article, which I've linked to on the current slide. So a bit of background there on the types of attachments and how the deduction would be calculated. But let's try and put that into practice now and show you how the program deals with this. And we're going to take a look at setting up and assigning attachments to your employees. And first thing we're going to show you are the pay element settings. So here we're going to look at setting up admin fees if you choose to deduct that from your employee, and also the option to add a replacement description for the attachment. And we'll also have a quick look at how to check that your payments have been set up as attachable earnings by ticking the boxes highlighted there on the screenshot. So back to the demo and staying with the company tasks, I'm just going to go into the pay elements area, just here on the left-hand side. And if I go to the attachment of earnings orders, here we have references 1 through to 17. And these are the different types of attachments you'll be able to select. Now, if you want to deduct that £1 admin fee from your employee, what you will need to do for the category of attachment you're using is to set the admin fee column to yes. So in this example, for any council tax attachment, I am going to charge that £1 admin fee to my employee. But we also have a column for replacement descriptions. So it's completely up to you whether you use this or not. There might be descriptions here, such as 1971 priority. So it's referencing the 1971 Attachment of Earnings Orders Act, I believe an Act of Parliament, but you might want to replace that description. So maybe I want to call this first one Priority AEO, a bit more meaningful to our employees. And any replacement description that you enter here will be used in place of the standard description when you're assigning the attachment, and also when it comes to printing things like payslips. So other than assign the admin fee and any replacement descriptions, that's all you'd need to do on the pay element settings for attachments. A quick look at our payments. So overtime and commission payments in this example both form part of the attachable earnings. And if I edit the payments, you can see the 3 boxes on the right-hand side for community charge, council tax, and all other attachments have been selected. This is the default setting for any new payment that you set up, and I've mirrored that setting for my commission payments as well. But I also have a kind of business expenses payment for reimbursing expenses, which I have not included in the attachable pay. So those are the pay element settings. What we'll now take a look at is actually assigning an attachment to an employee. So if I move on to my employee tasks, you assign it from the employee record, although there is a little bit of a shortcut if you're in Enter Payments to add an attachment, which we'll see later on in the demo. But I'm just going to go into the first employee record of the 5 that I've highlighted. And if I go onto the Employment tab and down to Pay Elements, you'll see there is an Attachment of Earnings Orders tab. And this is where you can assign the relevant attachment to your employee. Now for the first one, I've received a council tax attachment of earnings order. It's a CT-AEO. I've been given tables to use as well. So from the attachment name, I'm going to scroll down and find council tax number 7. It's not a Welsh one, it's an English one in this case. And once I've selected that, I can then fill in the relevant details. Now, because this one uses tables, you can see that it's put a tick in the Use Tables box at the bottom. So important to check that that has been ticked. And I can't actually enter a normal deduction rate because that's going to be calculated for me. And protected earnings are not relevant to this attachment type either. So the only information I really need to enter is the total attachment amount. So let's say it's £5,500. The date the order was issued. So this should be on the court order you've received. Any reference that you want to make a note of. And then there is an order end date column, which you would only fill in if you've been told by the court or the issuing authority to stop the order before the total attachment is reached. So in most cases, you just let it run its course until the full attachment has been paid off. But if, for example, the employee has repaid the full debt directly with the creditor, they might then tell you to stop the attachment order, in which case you can just put an order end date in, maybe make that your last pay date. But we're going to leave that blank. We've got use tables ticked. I'm going to click on to save, and that has assigned the council tax attachment. I'm also going to assign some other types of attachments, so you get to see a bit of variation. So for employee 2, I'm just moving on to, I'm going to go into my pay elements and into the attachment of earnings orders. For this one, I've received a child maintenance attachment, and there's 2 categories for this. Category 2 and the child support 2012, I think is category 14 or 12, and number 14. And the one you would use would depend on how the protected earnings have been worked out. So if you've been given a specific protected earnings amount that your employees pay should not fall below due to the deduction, you would choose category 2 for child support. But if you've been given a protected earnings proportion, and it's almost always 60% in my experience, you would choose reference 14, child support 2012. And it tends to be orders that were issued from 2012 onwards that would use that 60% protected earnings proportion, and that is why we need to choose this attachment type. Now, we have been told what the normal deduction rate is, so the amount we need to deduct, that's £240 per month in this example. I can't type in a protected earnings amount because it's a proportion, 60%, and the system will work that out. And for child support, because it tends to be an ongoing arrangement, you'll probably not be given a total attachment either. It'll be ongoing until you get a notice to stop making that deduction. So total attachment in this case, we're going to leave at 0. So we'll put an order issue date in. I'm just going to use the start of this month. And with these types of orders, before you can save them, it does ask you to enter the reference number, which will be a 12-digit reference. So that will be on the attachment order. I'm just going to put some dummy information in there. And if I click on to save, we've now saved the child support attachment for that second employee. Let's do one more. Employee 3. So this one is an attachment we've received with a normal deduction rate and protected earnings. It doesn't say it's a priority order, so it doesn't mention priority. So the category I'm going to choose is category 4, so 1971 non-priority. And again, we can fill in the details. So let's just put a normal deduction rate, £150, a protected earnings level of £1,000, and a total attachment of £3,000, again with the order issued date. So we've got everything entered for those 3 employees. That's the attachment orders set up and assigned. I will give you a quick recap of that process, and then we'll take a look in the pay run. We'll start to explain how the deductions have been calculated. So we've added an admin fee. You can add your own replacement descriptions if you wish to. And then assigning the attachment is a case of selecting the correct type once you've worked out what it is, entering the relevant details from the attachment order. So normal deduction rate and protected earnings if applicable, total attachment amount and the order issue date. And if it's one of these that uses tables, so community charge, council tax, earnings assessments, fines enforcements and direct earnings attachments, do make sure that the tick is in that box so that the amount can be calculated for you. And you can find all of these steps step by step in our support article in the link on this slide. So let's continue the demo by processing these attachments. So all of these employees are paid monthly. I'm going to go to my payroll tasks and set the next pay date. It's actually going to be tomorrow, the 30th of September. And if I then go into the enter payment screen, you'll see the payments that have been entered. So just a standard salary for this employee. And then if we click on the attachments tab, this is where we'll find details of the attachment. So for council tax, the attached value has been worked out for us. It's been worked out from the tables within the legislation. This one we've included an admin fee, so a further £1 is being deducted from the employee. The next column is the attachable earnings. So this figure is the employee's gross pay minus tax and national insurance. So this is the amount that that's being looked up in the table, and the amount deducted is the attached value, in this case, the £330.52. So just to explain how that's been calculated, take a quick look at the table. So in the AEO rates for council tax, attachable earnings between 1420 and 2020 per month is a deduction rate of 17%. So that's where this employee falls in the tables. And going back into the enter payment screen, the amount deducted, if I bring up my calculator, is the attachable earnings times 17%, and that's your £330.52. So that's been worked out automatically, and that is then being deducted from the employee. Let's take a look at the next one. Employee 2 had the child support attachment. So that had a normal deduction rate of £240, although you can change it within the enter payment screen if for any reason you wanted to change the attachment value. No admin fee for this one because we didn't select that option, but we've got attachable pay. So this is what's left after tax and national insurance, and the amount deducted in this case is the full £240. Now, protected earnings for this type of attachment is 60% of the attachable pay. So this £240 isn't going to reduce the net pay below 60% of attachable earnings, and that's why the full amount is being taken. But let's just change that scenario slightly. Let's imagine that this employee has perhaps been off sick all month. So we're not giving them any company sick pay. We're not going to give them their salary. We're just going to give them statutory sick pay for the month, which is £377.53. Looking at the attachment now, we've got attachable earnings of £511.73. So it's actually a tax refund, which has been included in the attachable pay. But the amount deducted isn't the full £240 because 60% of the attachable earnings is the protected level. So the maximum that we can deduct is the £204.69. And you can see there's an amount being carried forward. So what that means is next month, assuming the pay is sufficient to allow it, it will deduct the 240 plus the amount carried forward, all being well if he's returned to work and he's back on full pay. So that's how protected earnings would work in the case of these more recent child support orders. Okay, and on to the last employee, a non-priority order. So £150 normal deduction rate. Attachable earnings, I think we put in £1,000. So it's not going to take it below the protected earnings, I should say. Protected earnings was £1,000. So the full £150 is being taken. But let's imagine maybe they're on half pay for some reason, or they haven't worked the full month. If it does reduce, you can see here the amount deducted has gone down so that it doesn't take the attachable earnings below the protected level. But with this being a non-priority order, it doesn't carry forward the difference. So anything that's priority or child support, it will carry forward. If it's non-priority, it doesn't. So in this case, it would only deduct £9.60 if the attachable pay, in this case, was £1,009.60. So just to illustrate how that can work if the pay is going down below the protected earnings. So those were the three attachments that I set up. I'd just like to show you how that appears on some of the reports. So if I go into the pre-update reports, we'll take a look at a payslip, just a standard payslip. Just going to zoom in slightly for you. So it gives the name of the attachment, the amount deducted, and in this case, there is also an admin fee of £1. Second employee, child support. That was being deducted like so, but it wasn't the full amount, wasn't the full £240. And then for this third employee, the non-priority order, £150 being taken. I put them back up to full pay, and that is shown, given the label, the standard description of 1971 non-priority. There's also an attachment of earnings report that you might find useful. I've added it to my favorites, but it's in the summary section, this attachment of earnings report. So this gives you a bit more detail for employees that have active attachments. It gives you details of the attachment, gives some of the year-to-date values as well, and where applicable, gives amounts that have been carried forward that perhaps will be deducted next time round. So that's the attachment of earnings report from the summary folder. I've also added it to my favorites. So if I just go ahead and complete the pay run, I'm just going to update the records. And we'll just jump forward to our next pay date, just to finish off this demo. So for the next payment, first employee, still getting their usual wage. The attached value has been calculated from the tables. Let's look at the next employee. They're actually back to work now, so they're back on their full pay. And if we look at the attachments, the attached value, the normal deduction rate is 240, but it's actually clawed back the amount that was carried forward this period, because we can do that. The attachable earnings are back up to their normal level. It's not falling below the protected earnings. We've actually caught up there on the amount that should have been paid over the two periods. With this third one, if the full deduction hadn't been taken last month, it wouldn't carry forward. It would just try and take the normal attachment the next month. And I do just want to end the demo by showing you what would happen if you need to add a further attachment to an employee that already has one. So we can add further attachments directly from the enter payment screen. Like I mentioned this earlier. Let's say that they have also had a council tax order through. Now this one actually takes priority over the non-priority order, as the name suggests. So if I put the details in, at the moment, it's priority 2. So what we just need to do in this case is we need to switch the priorities round. And the easiest way to do that is to set one of them to priority 0, change this one to 1, and then change this one to 2. And if I click on to save, it just means it's going to take the council tax one first, based on the higher attachable pay. It's then going to move on to the non-priority order. And that's the order that you should be deducted them in if you have more than one attachment type. Priority orders first, in date order, followed by non-priority orders. And that is about it for the demos. So let's just give you a quick recap on processing the attachments. So this is available in the handout as well. So you can see the details of the attachment being deducted on the attachments tab, which you'll find in the employee record. So the attached value is either the normal deduction rate or the amount calculated by the tables. Admin fee, where applicable, will appear. Attachable earnings is what's left after tax, national insurance, and any higher priority AEOs have been deducted. It then shows you how much is being deducted, and where applicable, amounts carried forward only applies to priority orders. So that's pretty much it for the presentation, but we have got a little quiz for you, just a bit of a knowledge check on some of the information that I have just explained. So if you want to join in with the quiz, we're going to use the polling feature. We'll give you roughly a minute to answer each question, and we'll see how we get on with that. So starting with quiz question 1, just about to launch that now. So which attachment type would you use for a child support attachment where there are 60% protected earnings? So would you choose the category child support? Would you choose the category deduction of earnings order? Or would you choose the category child support 2012? So you received an attachment order, it's for child maintenance, it's given you the normal deduction rate, and it's told you it's a 60% protected earnings proportion. Which of those three attachment types would you set up? So getting some votes in now, about 49% of the votes in. We'll give you a little bit longer, another 10 seconds or so to choose an answer, and then we'll see how you've got on there. Okay, so last chance. And we're going to close this in 3, 2, 1. So that's your first question, and let's reveal the results. So this is what you thought, 15% have gone with the child support option, 4% deduction of earnings orders, but I can tell you that 81% that chose child support 2012 were correct. So if it's child maintenance and there's a 60% protected earnings proportion, it is that later child support attachment, number 14 in the references that you need to choose. So well done to those that got that one right. Next question. This one's true or false. So this is your statement. If a non-priority attachment of earnings order is not deducted due to the protected earnings, it will be carried forward to the next pay run. So is that statement true? It would be carried forward and deducted on the next pay run, or is that statement false? It would not be carried forward. It would simply try to take the usual normal deduction rate in the next pay run. So you've got a 50-50 chance on this one. A non-priority order is not deducted due to the protected earnings level. So it is carried forward to the next pay period. Is that true or is that false? So this one looks a little bit closer. Got about 70% of the votes in. Give you your last 5 seconds or so. 3, 2, 1. And we'll close that one down. Let's see if you got it right then. So these were the results. 36% said true and 64% said false. And the answer on that one is false. If it's a non-priority AEO, an amount isn't deducted due to protected earnings, it will not carry forward that amount to the next pay period. It will only try and take the normal deduction rate should the protected earnings allow that next time. So if it was a priority order, yes, it would carry it forward. Non-priority, it doesn't. So well done to the 64% there. And your last one in this mini quiz is, how much can you deduct from your employee as an admin fee for each active attachment? So is that 50p? Is it £1? Or is it £2 per attachment? So if you choose to deduct the admin fee, how much can you deduct for your employee per attachment? So this is a bit of an easier question, this one. Looking at the votes in so far. Okay, so 80% of the votes are in. We'll give you another 10 seconds. 3, 2, 1. And there we are, 100% correct. it is a £1 admin fee that can be deducted, should you wish to, from your employee for each attachment. So well done to anyone that got 3 out of 3. That's your mini quiz. And that pretty much brings us to the end of the webinar. So we have got a little bit of time where we can continue to answer your questions. If you want to submit any further questions, just drop them into the chat for us. I will quickly run through where you can find further support in all things payroll, including attachments. So first port of call for you would be our online help centre, which you can get to at sage.co.uk/help. From there, you can search for keywords to find the relevant knowledge base articles. You can read our support guides. There's a link to webinars at the top of the Payroll Help Centre. And from there, you'll also find our recent recordings. You can view our videos, and you can also get in touch with our support team. All the contact details are there at the Help Centre. We also have Sage University as part of our Sage membership, which you can access free of charge at sageu.com. From there, we have a range of e-learning courses that you can take at your own pace. There's online certification. You can pass our online exams and get your certificate. And there are a load of bite-sized learning courses that you can also drop into to brush up on your payroll knowledge. So do check that out at sageu.com if you are interested in Sage University. So, like I say, we will stick around for 5 minutes or so to continue answering questions. Do take this opportunity if you want to download our handout by clicking on the documents icon, downloading the printer-friendly version or the full colour one. It's up to you. And I'm going to go on to mute just briefly to have a look through any outstanding questions. If you are leaving now, thanks for joining us. If you see a survey pop up at the end of the webinar, really would appreciate any feedback that you might have. So do drop a few comments on the survey if you get a chance. You'll also get a follow-up email with a recording of today's session. So look out for that in the next hour or so. So I'm just going to go on to mute for a moment, and I'll come back to say goodbye once we've cleared the majority of those questions. So I'll speak to you soon. Okay, so we've had some great questions in there. Thanks so much for sending them through. We've tried to provide some answers to those, or at least point you in the right direction. So do check those out in the Q&A. We are pretty much out of time now, so we are going to call it a day very shortly. Just want to thank you once again for your time this afternoon. Thanks for coming along. I hope you found the session useful. If you wouldn't mind completing the survey as you exit the webinar, that would be extremely helpful. But for now, all that remains is to thank you once again. Stay safe, enjoy the rest of your week, and we look forward to seeing you at some of our other webinars soon. Goodbye for now.